With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB. On this Friday, I'm Andrew Gagan-Gray. You can join us as we wrap up not just the day, but the week here at AusBiz. And we're taking a look at the local market, the CBO 200, finishing at actually session lows, off by around 1/5%. The ASX 200, similar moves there, at down around 0.25%, which is a bit of a damp squib to end the week. But overall, the market is in fact up around 1% for the week. And of course, it's a fourth straight week, in fact, of gains. This as well. We got some positive news this morning, of course, given we had talks between Chinese President Xi Jinping and Donald Trump, which did boost the market. But there was another event that overshadowed that. I'll get to that in just a moment. But overall, we can see that we're up for the week, as I mentioned, by about 1%. All right, let's get to the themes of the day then. And wow, what a spectacle it was. The bromance brawl between Donald Trump and Elon Musk. You'd still imagine there's so much more to play out on that front, but clearly that bromance is over for now. Of course, also stemmed initially from Elon Musk's opposition to that big, beautiful bill that Donald Trump is trying to get through Congress at the moment. It's all fallen apart since then, of course. Highs denied. Yeah, look, we're actually at the beginning of the day, perhaps threatening to crack a new high, at least touch those highs, but it wasn't to be for this day. And King's Weekend, we do have that three-day long weekend coming up to celebrate the King's birthday on Monday. All right, let's just get across some of the sectors that have been moving today. Certainly the gold miners, bit of profit taking there. Regis Resources coming off almost 6%. That's despite actually the gold price moving higher on increased geopolitical risk and then also obviously what we saw, that fallout between Musk and Trump, but perhaps more muted given there's some positives emerging perhaps in talks between China and the US on trade. Elsewhere, energy, just a little mix there with the larger producers, Woodside up around 1%, whereas the others, particularly the smaller end, coming off. And in the banking sector, just a little mix there. The Commonwealth Bank almost down 1%, of course, having recently touched new record highs again and crossing that $300 billion threshold as far as its market cap is concerned. Getting to the top corporate stories, BHP, that has moved higher on expectations. Perhaps it's reconsidering nickel as part of its portfolio. Evolution Mining, it's taking a look at, in the 12 months to the end of 24, gold reserves down for the producer. And copper resources, though, they've increased. Fletcher Building, it's being sued by Sky City Entertainment for more than $300 million. And AUB is up on NPAT forecast to reach the higher end of guidance. Blue Glass jumping on securing contract wins with the Indian government. All right, let's unpack what we've seen today. More broadly on the week to do that, we are joined by Clifford Bennett from Propex 24.
Hello, Andrew.
Cliff, welcome back. Good to see you. Let's start with the most interesting event of the past 24 hours. That has been that breakup between Donald Trump and Elon Musk. What did you make of what we've seen there? And perhaps the implications, because obviously share-wise, I mean, we saw that dramatic fall on Tesla.
Yes, and I think Tesla's outlook over the medium to long term is negative, Andrew, with or without the bromance breakup, because the major factor affecting the Tesla stock price is that in a world of massive and intense and larger competitors, how is Telstra going to maintain its market share? Of course, it's not. First mover usually falls back to a sort of 50 to 30% market share, but in this case, I think the competition is going to be very strong, and we're having that Chinese phenomena really hit the Tesla share price, I think. And then on top of that, what we've seen is a very powerful emotional catalyst, which could turn into an economic catalyst if Trump were to change some of the tax treatment and credits, etc., funding support for Tesla. And Musk is already talking about decommissioning some of his rockets as a result. So at the moment, though, really a vicious exchange of words. I mean, the more intense the relationship is, usually the more intense the breakup. I think probably Musk overstepped by going outside his role within the government and then seeing himself as the overall budget, United States budget arbitrator. So I think in some ways it's probably Elon's fault, but you can see that he's been working very hard to achieve something. He feels like it's already been suddenly undone.
It did overshadow that hour-long phone call between President Xi and President Trump, which President Trump described as very fruitful. But at the end of the day, they resolved to talk about more talks. There's still no development there, is there?
No, it's going to be a long road. And as I've been saying from the outset, China will be more resilient than the Americans think, and therefore China will not capitulate. China will not lose face on this. That's just not going to happen. So the Americans have a really tough negotiating road ahead of them if they think they're going to get anywhere near toward what their dream sheet is for the relationship with China. I think that will be very difficult to achieve. So what we're going to see is steady, modest steps moving forward, but nothing groundbreaking, or maybe a little bit groundbreaking here and there, but expect a long process. And the key point to remember is, regardless of how well the discussions go, we're going to have massively higher tariffs than were the case previously. I mean, that's just a given. We're going to have tariffs on nations around the world. That's a given. It's not as if, the market gets a little bit excited about some of these deals being made, but it's not as if the increase in tariffs and the global impact on trade that those tariffs has is going to go away. It just won't be a total catastrophe, but it will still be a significant impact. And therefore, it's not good for global trade. It's not good for global growth. And there is the United States is already in recession. Q1 was negative. You can't tell me that Q2 is going to be positive. So, we're seeing services contract now, 70% of the economy. Manufacturing's been in a depression for 3 years, contracting for 3 years at COVID-like lockdown levels. So almost it's really falling apart there still. And of course, that's what Trump's desperately trying to fix with all of these initiatives. But in the meantime, those things have long lead times. And in the meantime, highly inflationary, very disruptive, making people unsure, uncertain, therefore slowing consumer behavior even further, which is already at depression rather than recession consumer confidence levels, and small business as well, and large corporations just putting hiring on hold across the country. So the United States is already in recession. The tariffs are going to be better than their worst case scenario. How much better? Probably 60, 70% better. But that 20 to 30% deterioration in the global trade map is still going to be felt around the world.
Well, in fact, we get another data point tonight with the non-farm payrolls out of the States too. Clifford, I mean, you talk about being in recession already. What about the prospect of stagflation? Is that very real?
Oh, I think what we're going to see, the tariffs are a worst case scenario. They bring on higher inflation. My inflation target for the United States by year end is 6.5%. Now, if I'm off that and it's only 5.5%, it's still a number that makes it very difficult for the Federal Reserve to support an economy in recession, because they see similar risks, I'm sure, behind closed doors, though they're not saying it aloud. They keep using general terms, but I'm sure those sorts of numbers have been bandied around. Makes it very difficult for them to cut rates to support the economy. So usually an economy is rescued by the central bank cutting rates, monetary policy, and by fiscal stimulus. But the US already has a runaway fiscal surplus largesse. There is a big spending bill coming in the Trump bill, which brings us back to the opening point today of Trump and Musk. So that will help to some extent But it's not as if the administration sees its role to rescue the economy. That spending is about achieving other long-term goals. So we'll see how all that pans out. But I just don't see this US recession being quickly turned around, and that has to be a worry for equities long term. I noticed something, Andrew, if you don't mind my mentioning, about the CBA stock price movement today, down 9.91%. I think it's the ultimate indicator of whether the Americans, particularly Europeans too, but the Americans particularly, are still buying Australia and other nations' equity markets because they were worried about their own market. Maybe they're going to stop doing that, but I also think it's an indication that going into this weekend, and I don't know if it's an issue we want to discuss on the show, but going into the weekend, people are a little bit nervous about some geopolitical pressures that have built up over the past 10 days.
Yeah, not the least, of course, being what's likely to come as far as the Russia-Ukraine conflict is concerned. Clifford, let's turn to the Australian economy. Of course, we had that GDP read. Growth in the March quarter, tepid. You might use a more colourful adjective.
I mean, the private sector is negative. I'm pretty confident of that. And I think the Australian economy, I called it way too early. I've been calling this way too early, but it does seem to be building now towards a rather rapid, worrying slowdown. That is offset in this country by massive government spending. We've seen, I saw one report that 40% of the jobs created in Australia over the last sort of 3 years were in the public sector. So we're becoming a very public state. I could use a more violent term, sorry, not violent, but more profound. It's almost like we live in a two-party communist narrative-controlled state at times, and certainly the public service is just taking over more and more of the private sector, and it's reducing actual productivity of real hard-working Australians in both manufacturing and services, particularly in services, where there's a lot of people now filling compliance roles and middle management roles and processes for government regulation purposes, etc., and taxation, the complexity of it. All those complexities are leading to more and more people not doing directly productive work and doing instead work that supports those who are doing productive work. But we're reaching a tipping point where it's just unsustainable that we have too many people making a living, if you like, off the back of fewer and fewer people doing actual productive work in terms of goods and services.
Cliff, almost out of time. You mentioned those heightened geopolitical risks. What's your view in particular with those key commodities of gold and oil right now?
Well, I think going into the weekend, people are going to be nervous about being long stocks. It doesn't mean the bull run is over, but they're going to be nervous on gold and oil. They're going to be nervous about being short those markets going into this weekend. OPEC is trying to be a responsible global citizen and keep the price down. But if there is a serious Russian response, and I think that is a given beyond anything we've seen so far, because they're going to send a signal that no one should mess with their nuclear-capable fleets, and that will be a global signal. So I think something significant could happen, and we need to be aware of that, and it would be difficult to go home not long gold and oil this weekend. I think you could see those prices drift up during the global trading day, what's left of it.
All right. Well, despite those concerns, Clifford, enjoy your long weekend. Thanks for joining us on Provex 24.
Yes. Touching wood, Andrew.
All right. Yeah. Thanks, mate. Cheers.
All right. Thank you, Andrew.
All right. Let's turn to our stock of the day. It was Virgin Australia, of course, ahead of its float. Our experts, Adam Dawes from Shaw & Partners and Rudy Philippik Van Dyke from FN Arena.
One word, no. I don't think you need to be there. Everybody does remember, there's a couple of things. Obviously, airlines take a lot of people to get you on a plane. They're asset heavy. There's more planes. Qantas is the best run airline in the world. I'll leave that one. Rudy will disagree potentially with me or not agree with me. But yeah, so I think overall, Virgin is a great airline. It's going to be very tough. But remember, everybody, never buy off private equity on an IPO. We've got Maya, Adore Beauty. There's certainly many other examples of how private equity, puts a lot of debt in there, wraps it up with a nice little bow, and then gives it back to retail shareholders.
Is Virgin going to be a very good long-term investment? I really doubt it, and I draw those conclusions from the first experience when it was listed. There are fund managers out there and asset managers that almost literally need to have a stake in everything that counts in the market. That's fine. All right? The market consists of various players, and we all need each other. We need people who buy at the bottom. We need people who still buy at the top. But we don't need to be there.
Well, let's wrap up this day then with a look at the leaders and laggards, beginning with those in the green. We were just talking about Virgin, its competitor Qantas there. In fact, the pick of the bunch there, up 3.5%. Whitehaven Coal also doing well, up a similar margin, along with James Hardie, Minres and Alcoa on the negative side. And West African Resources updating the market on its output. It's off almost 8%. Nuix hit today, along with Regis Resources, Iluka, some of those rare earths and lithium miners being hit, perhaps on the prospect that China's going to dial back on its restrictions, particularly in rare earths. Checking in on what's on overnight, as I mentioned there with Clifford, the key will be US non-farm payrolls tonight, further indication of how the US economy is tracking. And in the week ahead, let's take a look at that. Well, of course, we do have the public holiday here locally for the King's birthday. We also get a read on inflation out of China and the US, plus the budget balance there in the US. Consumer confidence locally here, as well as migration data. All right, let's recap then. And we have we finished Friday negatively. So on the COB 200, off 0.1%, more like 0.25% lower on the ASX 200, to be up around 1% across the week. That is the COB. Thanks so much for joining us. Enjoy your long weekend. We'll see you on Tuesday.